Hello, everyone. Welcome to the Meet the Manager Sourcing Deal Flow edition. This VC Lab event helps to bring together leading venture capital managers to share their secrets on effective deal flow management. So my name is Mirto Lalakos. Here at Desal Group, I run our flagship programs such as VC Lab, which is a closing program for new and emerging VC firm managers, LP Institute, which is a learning program for individuals and institutional investors who are looking to learn about the VC asset class, as well as Venture Institute, which is a learning program for those who want to learn the basics of venture capital. Most people want to kind of start a career in VC. So if you're interested in any of those programs, go to our website. We have applications open for all three of those. And overall, what we're doing here at Desal Group is that we're building a community and powering the next generation of VCs worldwide. Our mission is to turn venture capital into a force for good in the world. And there's two elements that are really important in this mission. So the first one is kind of the good part, which is all about creating impact and change and kind of reversing some of the things that, are happening in the world, like climate and social injustice. But the other element of our kind of mission statement is the force. So we believe that only the best can kind of turn things around from where we are in the world. And so we have kind of this philosophy, and we're super adamant about working with the best. And speaking of the best, today, we're talking about deal sourcing with some of the best kind of in the field and some of the best to kind of do this today. And deal sourcing, it's the kind of superpower of every successful venture capital fund. And we want to talk about how you source, how you build a pipeline, and how you go through this pipeline, which is usually hundreds, if not thousands of deals per month or quarter, without missing the best ones. And we have an amazing panel, as I said, of all made up of emerging managers who are doing this kind of top class in the world right now. Before I have everyone introduce themselves, however, I do need to read through this disclaimer very quickly. So here we go. The content presented today is not directed to any investor or potential investors and does not constitute an offer to sell or solicitation of an offer to buy any securities. So with that out of the way, I am honored to introduce everyone here to our speakers today. We have Mark Zhu from Zenture Capital Ventures, Ali Jamal from First Check Ventures, and Cam Crowder from Redstick Ventures. So hi, everyone. We're so excited to have you here today. Can I pass over to you guys so that you can further introduce yourselves? And maybe we can start with you, Mark.
Sure. Thank you to include me in this discussion. I'm really excited to be here. I'm Mark Zhu. I'm a general partner at Zenture Capital. We are a pre-CC stage fund. We went through the VC Lab cohort 7. That was a couple of years ago, so feels like a long time. But certainly worked very closely with the VC Lab, and that's our group. Our sweet spot is really looking for leveraging the fast-moving, emerging AI automation technology to solve real-world problem. With that, I will just pass on to the other panelists.
Yeah, I can go next. Cam Crowder, co-founder, general partner at Redstick Ventures. Really excited to be here and talk deal flow. It's one of my favorite things to talk about. So Redstick, just to give a little context, we're a food tech fund. We really focus on labor efficiency and automation in food and sustainable food production. Pre-seed, seed, like I said, early stage, and we really like to back founders with big ideas. So that's Redstick.
Hi, I'm Ali Jamal. I run First Check Ventures. I was in VC Lab cohort 8, so it's been a couple of years since I graduated as well. VC Lab has been incredibly helpful on this journey. Before kind of joining VC Lab, I had a syndicate as well as I was a pretty active angel. And so through that, I ended up really figuring out what I liked, what I wanted to be a part of. And, I think the name kind of says it, like what excites me the most about being in this system and what I get excited by.
Amazing. Thank you guys so much. So, what I want to do today is really start to kind of paint the picture of who you are and what makes you so good at what you do. And so kind of to start that and to go back from the beginning, can you all tell us a little bit more about your background and how you got into venture capital? And maybe we can start with you, Ali.
Sure. So, I don't like to think of myself necessarily as a VC. I tend to think of myself as a, startup person, and particularly in product and growth. I did that for more than a decade in startups, initially in Silicon Valley, and then eventually all over the world. I ended up leading growth for a couple of different unicorns in Latin America. And during the pandemic, decided to, kind of double down on my angel investing, and then ended up starting a syndicate in July of 2020. That syndicate did really well. And so I ended up kind of leaving my job to focus on investing full time. And then, the next best step kind of after you've been doing a syndicate is to really kind of formalize it. And so I ended up starting, the VC firm to help me kind of really do the deals I wanted to do and really kind of help the kind of companies I wanted to help. And so I think the biggest thing for me is really trying to be value add in the ecosystem and using my background in product and growth to be more than just an investor, but also really help mentor and accelerate the companies that are in my portfolio.
Cool. I can go next. I think everybody's got like a weird story about how they got into venture, or most people do. Mine's pretty interesting as well. I was a franchisee in the Tim Hortons system, so I had a bunch of locations in Canada, and really started to make private investments, angel investments in 2019 because of the labor issues around food and food service. In my business, it was 125% turnover for about 7 years in a row. Really tried to focus on the people, and the turnover just continued to happen. So I was really coming into VC really to solve my own problems. So was angel investing around robotics and AI and got really curious around it. Didn't even know what VC was. And the more I got into it and people started to understand what the problems were around it, that I got deeper into the space and ended up in Silicon Valley at VU Venture Partners, where I kind of learned how to do deals. So everybody's got like a different background of how they got into it. There's no like straight line to VC, and I think mine's probably one of those very interesting stories.
Yeah, I'm a chemical engineer by training. Actually got a PhD in chemical engineering. So I spent actually the first 7 years of my career as an engineer developing product, specifically fuel cell at a fairly large organization. That's about 15, well, actually close to 20 years ago now. And as you all see, I mean, we have electrical cars everywhere, but we don't have fuel cell vehicles, right? With maybe exception of few of them in California. So through that process, I really interested in getting to know like how technology get adopted, how market can be ready or maybe too early for certain technologies. And I actually took an MBA program while I was working, and afterwards was recruited to join a corporate venture group in the climate tech space. And that's about 15 years ago. So I moved around, but all in the venture related space. And my last role before starting venture was at a deep tech investment platform based out of Bay Area. And what eventually drives me to start venture is that one is I'm not getting any younger. If I want to do something on my own, that's probably the time. And we also have a couple deals that we invested through our career, had really good exits. around 2021 timeframe. So we saw that, there is some credibility to our story, and that's how I got started with Zenture.
Amazing, amazing. Thank you guys so much. So, okay, so step one of kind of deal sourcing, I guess, could be building that pipeline, right? And this is kind of so essential for you guys. How do you, and you're relatively new as VCs in the market. So what I want you guys to kind of tell us more about is, how did you build this pipeline? Obviously, Ali, you were investing before, and some of you guys, you were investing before, so maybe that's kind of what starts it, but then how'd you grow it? So let's kind of dive a little bit deeper into kind of building that pipeline, especially in the context of kind of, your firm is, just kind of launched. So maybe Cam, we can start with you this time.
Yeah. I think like a VC is a networking game, right? So you either come with a network or you need to build a network. On my side, I was really lucky that there's a group in Canada called C100 that is actually in Silicon Valley. So it's Canadians working in big firms in Silicon Valley. And when I was out in Silicon Valley, I got in that group. So it kind of blew up my network that way. But I think at the end of the day, I think it's like, you gotta be, especially if you're early stage, pre-seed seed, like you have to be really close to the founders when they're starting the company. It's networking, it's bumping into them, it's going to mentoring at different, maybe venture firms that are bigger than you, that are in the same space. It could be going to meetups and things like that, and getting close to founders, investors, and corporates. But it's a networking game, and you have to put yourself out there. And if you don't do that, it's gonna be tough to find those deals. And you have to be where those deals are coming from as a venture capitalist. So that's kind of what we do at Redstick. We just try to be really close to where those deals are coming from, and get in at the earliest stage as possible.
Sure. Happy to jump in. For me, I think the biggest thing is, your reputation really matters in this, in terms of getting deal flow. And so having a reputation for being helpful and really focusing on helping out the ecosystem and where you can really add value, I think has been the biggest source of deal flow for me. I'm always willing to take a call with people very early in their building and give them feedback on their idea. And so then naturally when, they're going out to raise, they end up coming to me first. And then also, even if I decide not to invest in that, because I was helpful early in the process, they tend to refer me to their other friends that might be building or might be a better fit. And then, as you've started to build up your portfolio of, companies you've invested in, most people reach out to those founders first to kind of get help or get advice. And so if you've built up a portfolio of really great founders, those great founders are kind of constantly getting introduced to deals that then they end up introducing to you as well, especially if you've maintained a great relationship with them and have been able to be helpful and add value to their company and their role. So I think the biggest thing to just realize is how big your reputation is, and if you actually are able to add value to people and into what they're doing, and can, doesn't always have to be, it also be their cheerleader, but like always being honest and being truthful with them about what's exciting, what's not exciting, what they could do to improve. And, some of the best deals I've done have been companies that I actually rejected the first time or rejected the second time, or, told them, hey, I like you guys, but I don't like this company, you need to pivot. And then once they pivoted and they found something that actually made sense, they, welcomed the fact that I was the person that was honest with them in the beginning. So, trying to figure out where you can really add value to the ecosystem and what things you bring that other people don't bring, and how you can bring that honesty to them. That is incredibly valuable to the ecosystem and help you build out your pipeline.
I really agree with what Cam and Ali had just said, right? It is a network business, and it takes a lot of hard work, like Ali said. So for new managers, I thought to build out this network, other effective way can be really participate in some of those accelerators, right? Spend time with their company going through their accelerator program. And there are very good ones out there, including, Founder Institute and depend on what you're looking for. Like, so if you look at deep tech, like Activate is a real good one. So spending time with those companies, you kind of get to know them before they go out on the demo day and they're, raise the formal round. Some are real good companies. They circle up the capital even before the demo day. And I saw, they all invest tremendous amount in marketing. They have good reputations. They have a huge network in whatever area that you're interested in. And I think spending quality time working with those accelerator is also a very effective way, right? And another point I want to add is you see a lot of deals, and the key point is like our time is all limited, right? And so it's about spending this time providing valuable input and feedback to the company, and you just need to have a, I guess, well-functioning filter to focus on the ones that you want to spend the time get to know. Otherwise, you see hundreds of deals, you just don't have enough time to process them all.
Yeah, I love that so much how, kind of our industry really operates on kind of paying it forward. And that's how, then VCs become successful because everyone's then coming to them. And, it's just, such a positive kind of way to kind of operate in our sector. And this is one of the things I love about venture capital. And so, okay, so what I'm hearing is, you're building your network, you're building your reputation, and there's this constant kind of inflow of deals coming in, and at some point you kind of say, you kind of can predict how many deals you get per month, but there's what, so for example, famously Snapchat, the way that Barry Eggers from Lightspeed Ventures kind of found Snapchat is through his daughter, because his daughter was kind of using the app when it had just come out. So there's always kind of these like crazy kind of coincidences or kind of things that come your way and that fall outside of your steady pipeline sources. And I wanted to kind of ask, do you guys have one of these stories and unconventional, of a deal that unconventionally came to you and that happened to be really good? And maybe I'll actually leave it to anyone to kind of go first.
Yeah, I can give one example. So that's not with Zenture, but in my previous firm. So we were doing a due diligence on a company and was doing due diligence call. So part of it is to talk to the expert in the space. And we talked one of the expert, we had a real good conversation, and I guess tremendous respect goes both ways. We didn't end up investing in this company, but then about a year later, that expert reached out and say, hey, here is a company I'm working with, and you really should talk to them. And that company was about I think, nowadays probably not a huge exit, but like 7-8 times in 4 years. So on the IR level was really good. So that's one example, right? When you have those discussion, if they like you, they will keep you in mind. And those kind of deal, like it's in the utility data space. It just doesn't kind of show up unless somebody kind of connect you, right? And it is it was based out of Vancouver, Canada, out of our place. So it's geographically, it's also very in a different region. So very glad to get to know them. Yeah.
So, one of the probably biggest and most unusual deals I did was actually the first deal that I ended up syndicating, which was actually a super app in Venezuela. For those of you that don't know what super apps are, they're basically apps that end up having multiple functions and end up being able to serve multiple purposes for people. And I had seen the rise of super apps when I'd lived in Southeast Asia and had been really excited by that. I'd actually had the chance to invest in a couple in other markets, in Africa and in Asia. And I actually ended up working for one in Latin America. I ended up leading growth for Rappi, which is one of Latin America's largest super apps. And kind of again during the pandemic, if I had extra time, I was kind of surfing on LinkedIn, and I saw a post from a from the founder of a recently started super app, and it was called Yummy, and they were based in Venezuela of all places. And the post had incredible traction in a very short period of time. And so I reached out to the founder. I started talking to him, and I really enjoyed those conversations. And I thought that he was really knowledgeable of what was going on. He'd had experience in user acquisition, which was kind of my background with growth, and ended up really getting excited by what he was building. And so, was pretty excited about personally investing, but also wanted to check it out with different VCs. And so I ended up shopping around to quite a few VCs, in Latin America, in the US. And basically everybody told me I was crazy. They were like, who invests in Venezuela? What are you, nuts? And I was like, but they're actually a Delaware C Corp on top. All of the transactions they do are in US dollars. The money doesn't actually go to it's the actions are in Venezuela, but the money's not in Venezuela. The money's actually kept from a lot of Venezuelans outside of the country. So what's the real risk here? And so I ended up doing a syndicate for them, and then actually doing a second one. And then they actually ended up getting into YC. Then they ended up being instead of coming out and raise their seed round out of YC, they ended up being the first company that batched to raise their Series A. And they ended up being kind of one of the biggest success stories, both from that batch and now in my portfolio as well. And so, being able to understand the things that other people say are just automatic no's, and understand if it's really an automatic no for you, I think is kind of the biggest takeaway for me. And I've had success investing in a lot of different regions that people probably normally wouldn't get as excited by. Obviously there's the big Brazil and India, success stories, but I've also had success stories in places like Vietnam and in Pakistan, and, Venezuela. So I think that there's a lot of opportunities all over the world, and that's one of the things that really excites me about being able to, be in ventures, being able to find these things that other people don't find, and not being an automatic no, but really trying to help these entrepreneurs grow.
Yeah, mine's actually more, it was outside of my stage. So us being food investors and around like automation, hardware, we do some deals in that. I got a deal, there was a Series B deal where they raised, I think it was 20 million in the Series B at a 99 mil valuation. And it wasn't something typically I'd do, but I met with the founder, and he was really, really special, like one of these technical and business founders, a single founder. And went out and looked at the product, and the product was unbelievable. I was really, as a former operator of a Tim Hortons franchise, it was like a smoothie machine. The company's called Botrista. That was, you could essentially do any type of drink out of this machine, cold machine, nitro coffee things. So I wrote an angel check in because he thought I could help out. And that's actually been a really good investment for me over the course of a year and a half. We're marked up 3x. So even though it was at a stage, it was kind of interesting because I am a food investor that people look to us to do some of these things. So yeah, you never know where a good deal can come from and what valuation it can come from either.
I love these stories. Everyone, by the way, if you have questions for the audience, there's a Q&A button at the bottom. So do put your questions in, because I want to kind of take some of those and kind of bring it to the panel here. But make sure you put them in the Q&A button, not the general chat, because we won't monitor that one. Okay, so we've kind of talked about, how you get a pipeline. It's through your network and through people who know people, but there's always going to be, a level of cold inbound. And I bet that you guys probably look at those, and most VCs kind of always keep an eye out on that inbound. And a lot of the times what ends up happening is that inbound kind of cold stream of deals ends up kind of being the large quantity, or, a very big percentage of your overall pipeline. And so, when you're kind of going through, it could be hundreds, if not kind of thousands of pitch decks. and you're kind of going through them, and I bet you're kind of thinking, oh, I've seen this before. Oh, this isn't gonna work, and skip, 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 skip. What is it in a pitch deck that you'll get cold and you're like, okay, I'm gonna actually take a meeting after kind of swiping left on all the decks. So I don't know who wants to go first on this one.
I can go first. I think, being early stage investors, it's always going to be about the team. And I think really when you think about it, it's at like founder fit, like founder market fit. So if you see a team that like, we saw an early stage deal where it was an ex-Flexport senior executive that built a business in Canada, the $100 million business with his credit card. And he was going to go start his own thing and like kind of like a Shopify kind of version of Flexport. That's something that you look at and go, okay, that's something I want to look at. And that came in cold, right? And then the other part that you look at is like, have they found some interesting market maybe that someone hasn't identified that there's a massive opportunity in? But typically, if it's a cold thing, it's got to have that founder market fit. Otherwise, there just isn't enough trust to kind of do the deal. So always looking for that founder market fit.
I think for me, one of the biggest things has been just understanding the clarity of what they're saying and who actually has a clear vision of what they're building and why they're building it. I tend to try to invest in businesses that are as simple as possible and that they're clearly out there already getting traction and getting users and getting customer feedback. And so seeing how they explain the problem in the deck and why it's a problem, how big that problem is, and what they're actually doing to solve it, and if what they're solving is a real solution. And then obviously the team is super important, but I tend to try to figure out more of the team dynamics on the call itself. I feel like especially in emerging markets, there aren't always the same signals as there are in the US. So going to Stanford or going to Harvard is great, but that's not an option for a lot of people in some of these other places. And so even if they didn't go to school, or if they didn't work at Uber, or even if they didn't, get some of these opportunities that we got from the US, I still want to make sure that I at least talk to them and understand where they're coming from. And so, one of my best companies right now is actually a kid that dropped out of a Mexican university, right? And I ended up investing in him at the age of 20. And so it really just, depends on how motivated the people are. And I think great companies and great entrepreneurs can come from everywhere. So I try to keep as much of an open mind. And I honestly just try to talk to as many people as possible. I talk to 50 to 60 companies every single week and just have as many conversations to figure out who do I think can actually build something meaningful.
And I can just add, what get me really excited is the revenue growth, people willing to pay for it. And we look at a lot of deal at the kind of B2B space. So sales cycle is really important. If they have a fast sales cycle, that's a strong indication of value proposition to their customers, right? So yeah, it's a little bit idealized. Not all the company we talk to have revenue, but when we see they can somehow bootstrap to revenue and the growth, that really get me excited.
Yeah, and how important is it for you guys to diversify your sources of deal flow? Of it, is it and kind of beyond that, is it something that's in your strategy to kind of make sure that your sources of deal flow are diverse, or does it just kind of happen naturally and you just need to focus on the one that's kind of most valuable to you? Ali, maybe we can start with you.
Yeah, I think it sort of ended up happening naturally. Like I think if you end up building a reputation with other VCs, with your LPs, with your portfolio founders, then you start to have more and more diverse sources. You have more and more people referring stuff to you. You have more and more people who are talking about you on other social platforms, so more and more people follow you. And it kind of ends up becoming the snowball where the more good you put out of the ecosystem, the more good comes back to you. And I think that's probably been, the biggest source of diversification is building up a reputation of being helpful then kind of leads to more and more people trying to seek you out.
Mhm.
I do want to say something on this, Ali, because so we have a program called Venture Institute, which I mentioned at the start, and it's people from all over the world who are looking to kind of get into venture capital. And there's one kind of thing that we ask for, like, name, 2 VCs from your local ecosystem. And it's crazy how many times I see your guys' names. And just what I'm trying to say here is how fast you can build that reputation, right? So you've only kind of started a couple of years ago, and already you're kind of like the people from that ecosystem that, the person who wants to get into VC in that ecosystem will put you down as kind of the venture capital fund over there. So it happens really fast, and it's crazy to see. Anyway, Mark or Cam, do you want to go next?
Yeah, I can
Yeah,
go next.
go.
Right. Oh, sorry, Cam. So I'm based out of Connecticut, and my partner is in the Bay Area, right? So in the Bay Area, certainly it's a different type of deal flow from Connecticut, which is stuck between 2 large market, Boston and in New York. I do get to those market often, but for a small emerging fund in a smaller market like Connecticut, it's easier to make yourself known, right? And there's great universities like Yale and UConn, so there's no shortage of deal flows, and we have real strong network with the local investors as well. And another thing that I try to replicate it is going to other markets with great universities, and I have some connections there where the capital is just not as abundant. So one market is Pittsburgh. I got my MBA from Carnegie Mellon. Carnegie Mellon happen to have a very strong computer science and AI research activities, and we saw quite a few of a deal and made investment from that region. And so Midwest of US, if you look at the US market, there's obvious like disparity in terms of where the capital and the research funding and the innovation it doesn't completely overlap. And so there's definitely arbitrage opportunities.
Yeah, yeah, sorry, Cam, go.
I was just gonna say, like, because we're kind of niche with food technology, that like if you have these bigger firms, like we kind of throw our net out wide with these bigger firms that maybe aren't just food tech funds, or kind of like doing everything. And when they see a deal that's a food tech fund, they come to us, they think of us first. And it's kind of nice to kind of like talk through deals with people that are kind of like bigger and looking more broadly, and we're looking more focused. So it kind of gives us like we're maybe like the knowledge thought leaders in the space, and then they kind of bounce ideas off us, and it kind of expands our knowledge base of like what they're looking for. So it served us really well on a lot of deals we've done where it's come from like a non-food VC. I joke with one of them that they've done the last 3 deals they've done are food deals. And I joke that they're a food tech fund now, or like a restaurant fund, even though they're like not doing that anymore. So yeah, just kind of like we throw the net out wide and look for those kind of like niche opportunities in food.
Yeah. There's a couple of questions here in the audience about whether or not you guys use those databases and platforms where startup founders go and kind of put their company up and are saying how much they're raising. Is that something that any of you are using?
It's not an active part of my strategy, but if I get invited to a platform or whatever, I'll check it out. And again, I think great deals can be found anywhere. So I'm always happy to look at stuff. But I find that, it's usually better just to reach out directly to the people you want to connect with. And I mean, I also have a lot of people who will, try to use a connection with somebody, but then, one of the things I say is like, just because, if you reach out to one of my friends or connections on LinkedIn and then they're making the intro for you, make sure it's actually a warm intro, right? Like there's a lot of random people who connect with you or follow you on LinkedIn. And then having a warm intro from somebody who isn't really a warm intro, I feel like it just ends up creating this like system of favors where now you owe them a favor. Now, like either I owe them a favor because they're sending me a deal, right? It just ends up creating all these extra obligations. So just send the decks directly tends to be my go-to advice.
Yeah, I agree with Ali. Like we're on an angel platform that has like 1,000 deals on it, but typically you're looking for like those introductions through someone. It's a better way to get a good, like solid deal, in my opinion.
Yeah, I agree. I'm just thinking about like maybe this is the idea, some kind of AI agent can replicate our thinking of picking out deals and then go to those websites. It's just simply in our day-to-day work, it's just not enough time to go through it. Maybe I get a summer intern and have them start thinking about this.
Well, speaking of AI, Mark, and I'm saying Mark because you know you're kind of in the AI space, but anyone else who's doing this, please let us know. Do you use AI to do any of your deals, pipeline sifting?
Yeah, I mean, what I've used is probably when I do some kind of the writing, like if I English is not my native language, right? So there's always room to improvement. But like say if I write an LP letter or some communication, I will probably put it and ask ChatGPT to make an improvement, make it better. So yeah, I mean, I think there's definitely a lot of opportunity. I mean, like you can use it for due diligence purpose, right? This is it's very, very useful in that sense. It's kind of like expert. You can ask questions. I mean, we look at the deals from all over the place. I was just looking at one that's integrating a soft sensor in some kind of medical device, right? And then just feel like with some of the AI combined with search, I mean, it generating information that's just very, very useful. So we're definitely finding a lot of use cases and more probably.
We've been messing around with, but it's by no means a product that we trust or anything yet. But I've been messing around with AI agents and like grabbing the information off the deck and then kind of taking our thesis for like a filtering process of maybe like one or maybe three checks, like team, market size, product maturity or traction, and kind of filtering it that way. But it is like super early, don't really trust it yet. But I do feel like the game is really getting through as many deals as you possibly can to find that like golden nugget in the haystack. So if you can get through more deals and filter quickly, I think like to Ali's point, you'll find more deals in places that you typically wouldn't maybe see them, but because you can get through more deals. So I'm really interested where this AI agent world is going to go. And I think it's definitely going to help make venture capitalists better and drive returns if you can kind of crack that code once the models get better.
I don't really use that much AI. I think part of my value add is actually putting like a human face to it, right? And that you're not getting dumped off to some associate. You're not answering some robot, right? You're actually talking directly with the person who's making the investment decisions. And so I think the longer you are in the space, the quicker you are at kind of being able to cipher through the information. I think, now most VCs probably take somewhere between 30 seconds to a minute to actually go through a deck to see if they at least, if it passes the initial check marks. And then I tend to think, if it passes the initial check mark, let's just talk. And so I tend to just send out very quick emails and do very quick meetings to just get that face-to-face as quickly as possible with anybody that kind of reaches the benchmark for me. And I think, again, that ends up adding to the reputation of being somebody who's helpful and building out people who can also help with kind of future deal sourcing. And I do tend to take, deals that get referred to me from people I know or from other investors, much more seriously and have a much higher percentage of actually going to a meeting. And so I feel like the more I'm able to actually validate who's good at figuring things out, the better my overall pipeline will be in the future as well.
Yeah. Alexandra is asking, with all the evolving market conditions, how do you adapt your deal sourcing strategy to make sure you're not missing out on what's kind of coming next? And I know that, for some VCs that could be, kind of knowing what's next is kind of a little bit passive, just because they constantly are kind of talking to founders, doing the things of the future. But for some VCs, it's very, prescriptive, very intentional. It's kind of part of the strategy that they'll kind of sit down and think, where do we go next? How do you guys think about staying on top of kind of where your markets are going?
I can take that one. I think what I do is I obviously, like, the more deals, and like Ali's point, the more people you talk to, more founders you talk to, you get like a pattern recognition of like where it's going. So you may see like 4 or 5 companies kind of doing like a very similar thing, and there could be like an opportunity around that. But I think the other piece really is like reading and digesting information in the spaces you're interested in, that again, this pattern recognition starts to like present itself of like where you think these opportunities could come, just by talking to people in your space, right? And for us being in food, like we can talk to corporates and see like what they're working on. We can talk to founders that are working in different spaces, and you kind of hone in on where you think the world's going to go in your space. So again, just like kind of like digesting as much information as you possibly can in your space.
Yeah, I would say that is that's a great question. I think that's people who are capable of like really looking forward and develop that kind of investment thesis, like future driven, is what differentiate, probably from most of the venture investors. You'll be like truly a kind of a great, investor if you are capable of doing that, right? I mean, one thing I'm kind of always exploring is that if there is a mega trend, that is going to take place. And then you kind of fast forward, think about a word, that technology, it has disrupted our existing world as we know. And then you look at the value chain, what's around it. And that probably give you some hints, what area you should start looking into, right? So one example I give is that now we all know EV is, although recently there's some speed bump like EV adoption, but for sure, I think people all think EV is gonna happen, right? And then if you think about like EV get broadly adopted, the lithium ion battery recycling is gonna be a large market. So we have came across like 5-6 years ago, or maybe 7 years ago, a company working on lithium ion battery recycling. And for us to develop the conviction in this technology, we need to kind of buy in that EV is going to be a majority of the vehicles that's driving out there, right? Without that conviction, you probably wouldn't invest in a lithium ion battery recycling company, because it's just not going to be a big market. So I think that's kind of one way to think about how to get ahead of an evolving market, is to look into those large trend and then analyze what's happening around this and how that's going to impact us in the future. So
I think one of the big things for me is trying to figure out which parts of the future are real and which parts are just hype, and making sure that I don't just chase what everybody else is chasing. We saw a lot of people that were Web3 and blockchain VCs in 2021. Now in 2023, are all of a sudden AI, and LLM VCs. Cool, right? Like I've invested in AI back in 2021 before everybody else was investing, and now that like nobody's investing in Web3, I'm looking at it, right? Like I tend to think that the way that I figure out what the future is going to look like is by trying to talk to the smartest people. And so again, I'm talking to 50, 60 founders each week. Even some of them aren't on my thesis. I've made a lot of investments that don't necessarily, like I wouldn't necessarily have um, been into the first time they said it, but then I started talking to the founder, I got more and more excited. And so really trying to find these, what the future is going to look like by talking to the people that are building it is really kind of the thing that excites me. And the other thing is that if something is super hyped and everybody else is chasing it, then those people don't really want to sit down and talk to, the small VCs. And so I don't end up having to waste my time with the people that are going out and trying to raise 20 million on a $100 million valuation pre-product. I want to see something that's actually real and something that, people are excited about building, and it has nothing to do with, what the hottest trend is. It's about what they actually are excited about.
Yeah, I love that. I love that quote. What I try to do is, try to discern what's real and what's fake, or, I love that. Jeff here is asking, once you have a broad network, how do you kind of stay successful in keeping in front of them? Do you, for example, have one-to-one catch-ups with the top of the network, or do you have some kind of marketing in place for them? Or are there any kind of strategies that you're using to stay top of mind for that network of yours? And yeah, Ali, should we start with you?
Sure. So I try to schedule regular catch-ups with the people that I think are most important. So we have, either a monthly, bi-monthly, quarterly type thing always on the calendar, and we can always, send each other messages otherwise, but at least then we have some regular period where we're checking in and either sharing deal flow or getting insights. I also end up having a newsletter, which, at least once a month, then people are at least seeing my name pop up. And then trying to, I end up going to a lot of conferences and trying to make a presence and seeing people face to face at those sorts of events. And so if I'm going to a conference, I'll make sure that I also spend extra time there before or after and let people know that I'm there. And then, try to get in that, coffee catch up or breakfast or whatever, before the conference starts or after the conference is over, and make sure that I try to just keep in touch with people. And I think even just sending WhatsApp messages every once in a while, checking in on people, ends up keeping you top of mind.
Yeah. I like Ali kind of said it earlier in the conversation, is add value, right? These bigger funds, if you can add value, you can be a deal source for them, be likable. Like Ali kind of said, like when you go to these conferences, be somebody that people want to talk to because you know your shit, and that you also like can be a good time a little bit. But I think the biggest thing is this idea of like compounding, right? Like do a deal with somebody. Once you do a deal with somebody, there's a money exchange, it's a penny test, there's a trust there, they see how you work. Once you start to do deals with those bigger firms, it's a compounding of like, you're gonna get another deal from them that comes back because they know how you worked and they understand what your thesis is and what you're looking for and those type of things. And on the conference side, like, don't go to like a one-off conference and then don't go back the next year. Like, pick the conferences that are interesting to you and like go to them 5 years in a row. And by the time like year 3, like we noticed that at the NRA this week that we were there last year. Now everybody knows us, and we threw an event. We had a bunch of people there. It compounds on itself. So just make sure you're kind of like finding the right people that you need to talk to, and then keep those conversations alive and keep moving the relationship forward.
I agree with everything the panelists had just said. Couldn't add much more. Just say this: it takes discipline. What Ali and Cam just talked about. You're just gonna have to keep doing it and make sure you stick to the plan.
I love that. So I'll take kind of a final question here. It's kind of going on to how do you, I'll read the question. How do you as VCs balance profit making with making a difference to founders, their businesses, and the ecosystem? So more kind of a values driven question here, but maybe Mark, we can start with you on this one.
Yeah, I mean, I have to say, you know, we have fiduciary duty to our LPs, right? So for most, you wouldn't be able to build a sustainable venture firm if you do not return capital, right? There's a lot of discussion about it. I mean, just about you know, DPI distribution. So we definitely stay very focused on that. And I would say, you know, coming from the clean tech climate side, I definitely still get very excited by you know, investments that can make a impact on the sustainability front. It's about building a balanced portfolio. A lot of those high impact investment is gonna, you know, take a while before you know, they can reach to the market. There's gonna be a return, but we need to have strong conviction. When you get there, it's gonna be like a Tesla type of exit, right? I mean, so I think that's what we are doing in terms of building the portfolio. You know, we want to see ones that are getting traction, that hopefully can get an exit in the not too distant future, knock on wood. But on the other hand, blend in the ones that with strong conviction and huge upside, as well as making impact in general. So that's my 2 cents.
Yeah, I think I look at it like, I think we're in a world where we can do both things. I don't think it needs to be like we're an impact fund versus like return driven fund. I think like we're in a world where like if you unlock value in the world, you're gonna make a lot of money and it's gonna be good for the world. Like I look at like what we're doing in food, like we're trying to like make labor efficiencies in food to lower the cost. So it's more, you know, we've all been to the grocery store over the last year and how inflation's affected, you know, whether it's going out for dinner or going to the grocery store or anywhere else. Like we view the things that we invest in that they're going to impact the world. And at the same time, we're going to do really well on the return perspective because we're solving real world problems. And I think if you focus on the real world problems and adding like capturing value, that it like money's a store of value, right? So if you capture the value, you're going to get paid more to do it. And I think that as investors, we're in the business to return money back to our LPs, and I don't think you want to lose sight of that.
Yeah, I really think that this is the beauty of venture, right? Is that what we're trying to do is build the future that we believe should be there. And I think the interesting is that everybody kind of has a different view of how they're putting those values and what that future looks like. You know, for me personally, I think the biggest thing is I see a huge discrepancy globally between, you know, the middle class and what they have access to. And so by going and providing a lot of basic service for everyday people in emerging markets, I think, you know, one, you're kind of enabling these economies and creating a flywheel of potential success. And on the other hand, you know, you now have millions and millions of users and millions of customers that you're actually helping and adding, again, real world value to. And so, you know, I think that there doesn't need, like, I think just inherently the nature of VC is that we're, you know, building towards these values and you know, everybody has their own values and what they see the future as. And you know, who am I to judge what other people's values are?
There you have it, everyone. We've reached the top of the hour. We do want to make sure that our panelists, who I'm sure are kind of back to back on calls after this, have, you know, a few minutes to breathe. Thank you so much, Mark, Ali, Cam, you know, for taking the time to be here and sharing so much with the community. Everyone, we hope that was useful. And, you know, once again, if you are kind of wanting to join the community or join any of our programs, go and check out what we have admissions for. We hope you enjoyed this, panelists. Thank you so much. Have a wonderful day.
Thank you.
See you, everyone. Thanks for having us.